You're still not in the top 10% when you get to 333. In the last 10%, you're still not there. You could see 4 numbers. I didn't do the gold to silver ratio though. It's gold to silver for me. The close for silver is a gold to silver ratio of 1/10. That's not something I need to show you a chart for. There's also a chance of overperformance because mining is currently at 6.9. Getting that up will take a lot of work. It's a byproduct in more than 60% of the stock. Silver is made in between 60 and 70% of the process, so 30% or 35% is really controlling the amount, as well as going down there specifically to get silver. He might call the last time you could have bought at 25.9 before it went up to $100 to $200 or $1,500. 100 times over. If you're a dollar maximalist, I think that will be the greatest point of your views. The market is getting close to a historic turning point where the gold to silver ratio could drop to single digits. This would cause a move that would send silver prices into the 4-digit range. This explosive potential is caused by a major supply bottleneck. Nearly 70% of the world's silver is made as a waste product when base metals are mined, so it is hard to increase production to meet rising demand. Because of this lack of flexibility, a change in the value of money could cause a sharp rise in its value. Francis Hunt is a technical expert who is famous for finding hugely unequal market opportunities. He is also known as the market sniper. He says that the age of dollar maximalism is coming to an end and warns that the lows in the past were probably the last chances to buy before a big change. Hunt thinks that prices could go up 100 times, and he wants them to reach as high as $1,200 or even $2,000. This is because there isn't enough main silver supply to handle the new money that will come in. Now, here are some clips from the talk with Francis Hunt. Before we go any further, please subscribe to our channel and click the bell button to get updates when they happen. Thanks, and have fun with the movie. The global HVF, friends, is the most important part of the story. Its goal is $333. That's right. Yes, you heard me right. The Jerusalem Post got it. Also, you can look up Francis Hunt's in the Jerusalem Post. They have 3 threes. Also, good job to them. In that way, they pretty much got it right in their study. Oh, and good job. I believe that is correct. Once again, a small high. But this is not the last top for silver for this part of the move. He might call the last time you could have bought at 25.9 before it went up to $1,200 or even $2,000 100 times over. If you're a dollar maximalist, I think that will be the greatest point of your views. This is a shiny week, this is a silver year, 16 years of being silver, and now it's here. So it's funny to me. Anyway, let's get back to what we were talking about. This was at a key level. This move is very big. It has been seriously helpful, and those who said it wasn't easy to get in anymore. You can enter all of the low-risk ones here. Guys who were worried about the big-time frame pace were 100% right. If you put your stop down here and buy somewhere else, that's a huge loss. You need a huge gain just to get a 1-to-1. But the gift of the HVF method is that we keep going with our trend. And most of the time, when you get a squeezy Japanese, you break to the upside. This is one of the strongest patterns, and you're in the melt-up phase, where it's going to be a higher percentage and give you more. It will just make you feel like a better seller. How about 7.3 bars for 7.5? At 92, it's not over. It's likely to be 10. How about that number? Lucky dealer that's made out of gangster doesn't tell you anything. In 8 months, you don't get those results. You don't. You catch the important times. We are shooters for the most important parts. Do you get it? That this is payday is a 40-year deal. After 40 years of not getting paid, all of a sudden you get 10 times your salary in bonuses, back pay, and tax refunds. I've said this many times, and I'll say it again. I told a friend who was walking his dogs while I swam. I love it when crazy dogs swim in that cold water. It's kind of like a hockey stick job. I told you it's a hockey stick job. I've warned a lot of people. The parabola is the best way to trade because once you have experience, most people don't make it to the end of the desert. They do not have the way. They don't learn anything. They don't have the logical wall to improve things in this case. Now I can trade again when I have the most experience using the best way. This is too hard for me even. I've done well before, but this will be the best hockey stick ever. It might work for you. Did you click on the link yet? Are you setting up your call? That is the question you need to ask yourself. We can totally use this skill in other situations. I don't want to talk about what I haven't been able to do. In fact, it's silly. I'd rather keep a low profile. And as I already said, I want to hide. I'm going to buy some gold with it, but the boat is going to sink, I'll lose my money, and I'll think I'm a fool. That's the end of the news story, you know? But for you, it's a skill that can be used in other situations. You could use that skill in other situations. That is, in fact, silver. It's been a great time. Watch out now. It could run, yes. It's possible for it to go 104. There are actually a few possible exits for me at 104. The 92.5 is the last goal. I have one or two around 198. That is where I have the bulk close. At that point, I can leave a few long shots as a guess. If things start to look bad, I can trade them if I want to. I have time. I'm going to watch it. It's an important time when a choice could be made. HVF lets you know when you need to focus and when you might need to make a big choice. I only change all the take gains to 92.5 when I want to leave. I let it go. Everything is shut when I'm sleeping, dancing, eating, or doing anything else. Okay? I'd like to get a little more out of it. After that, you have to put in time. Okay? Also, you need to know about symbols and how prices move. It's not too late if you think so. You're not. The best is still to come. There might even be turns around. Things might even get a little worse, but that won't happen very often. But when we get back on our bikes, you have to pedal after any pullback. I don't know how long that will last or how deep it will be. I don't know. I'm gonna wait and watch. When it's ready, the market will tell me. Well, it might not happen very often. It could be just one day. It might take a week. It might be more. It could be months. But I will be there and lean hard when it does happen. Friends, when you get to 333, you're still not in the top 10%. You could see four numbers. I didn't do the gold to silver ratio though. I think that a gold to silver ratio of 1 to 10 is a good level for silver. That's not something I need to show you a chart for. And within that, there's room for overperformance because mining is at 6.9 right now. Getting that up will take a lot of work. It's a result in more than 60% of the supply, and between 60% and 70% of the supply is silver. That means that only 30% or 35% is actually controlling traffic and going down there for silver. We don't want you to change that source too often. The market will respond if the gold to silver ratio goes up to 6.9. It's possible that you could go from 1 to 3. A business can't switch to gold right away, even if silver prices go up and gold prices go down. I don't mean for it to happen that way. I'm only saying to the very edge. They believe that we are building with this stuff. We can't turn around and go in a completely different direction. They need some time. They need to come up with new ways to make things. They need to look. The engineers and people who work with metals need to be brought in. Could this work? It's not firm enough. What should we mix it with? So the range for overperformance is from 1 to 3 and from 1 to 2. In a way, you could trade at 1 point at or just above. In the excess, but I'm happy when we go below 10%. That doesn't mean it will stay there for long. For fun, I might leave some on, but that's just Play-Doh. That's Play-Doh. You're already king. You're already a king. I'm now a king. You can rule like a king. Go outside. Act like the silverback ape. Take advantage of this chance. It will likely be the last quarter to 6 months before we change how the product is structured and how much it costs. You should make the most of this chance right now. At the moment, silver is following the rule of the parabola, which says that price changes happen much faster than time. This vertical rise is not a one-off event. It is the opposite of a global currency debt bubble that is popping. As countries go bankrupt from having too much debt, the prices of tangible assets are going up and down quickly. This is causing volatility that is apparently putting a lot of pressure on big liquidity providers like JP Morgan. In terms of technical analysis, the market has passed a key threshold, reaching interim level 2 at around $90.58 on the 6-month chart. In this case, there have been 6 straight periods of gains, which is a rare occurrence that points to a macro rest period or localized high rather than a bearish turnaround. Even though the long-term trend is still strongly rising, traders should be careful right now. Now, instead of aggressively buying more, the best thing to do is to lean out, which means lowering your leverage and locking in gains so you can safely make it through the inevitable consolidation before the next explosive leg higher. We need to go back to the interview. This is the metal chart. Let's close the planner over here. The parabola law says this. I'm going to use this background for Fat Koki. It's the silver chart, I guess, but this is how the curve works. I also believe that this is something that people don't respect enough. You should also stay inside the whole time. In general, this is how the chart looks on a longer time range. Stay with me here. This shape is known as a parabola. That's what it does. It makes you want to bend it backwards and do a loopy-loop. You know you can't go back in time, though. You can't go back in time. And at the start, around the age of 25, this is the time and this is the price. So, time over here and price over here, which is where the price is right now. And most of the time, you can be this long and get that much back. If we change the color of the return to blue, it shows the difference between what the price was there and what it is now. If you look a little further back, you can see how things are going and see that this is the current price, for example. Let's use this as an example because one of the questions most of you have is it too late to buy investment silver? Is it too late to buy or sell silver? Is it too late to buy gold, silver, miners, or something else? And every time the answer is no. Most people, though, don't know how to do it. Things are pricey for you now, and they will get even more pricey in the future. Why? Remember that we told you that the debt currency bubble is the opposite of the gold chart on the long term, which is something Minister AI didn't say. At first, you're going slowly, but then all of a sudden, you're going very fast. That is making countries poor. The orange line, which shows the gold value keeping value benchmark of accounts, is what you get when you add the blue line to the pink line. Someone said that J.P. Morgan said it was like Abraham Lincoln telling people not to accept everything they read on the internet. But he is said to have said that gold is money and everything else is also money. To sum up, he was the hero of the Great Depression back then. He actually didn't own much of J.P. Morgan. That was his name. In fact, legacy families owned most of the value of that bank. It holds the Fed and is probably the liquidity source that's making noise right now about accounts that are investing a lot of money in silver. Of course, what has surprised a lot of people is how volatile and steady the market move has been. Banks were caught off guard. I can't believe I got away with this for so long. I'll soon show you what I think I got away with. You can get that much advantage and access to an HVF during a parabolic macro melt-up phase. That's the third step of an upside HVF. Okay, let's do this. This is where you are. Now, you might see a line with pink dots or purple dashes there. Let's wash our faces. Get rid of all of our drawings. You've done something interesting. You have had 6 6-month breaks since our intro break, which was 6 months ago. There are a lot of 6s in there. 6 groups of 6 months each net green. That one was pretty much just square. Sure, I'll count it as a green up with a flat stroke up mega up. And this one, which you've been working on for 6 months now, began in January. It's only been 14 days, friends. So that's why it's not fat. Each of these had 90 days. It's not every day that you can trade. We already know that there are 21 business days in a month. At this point, it's likely 63 on average. It's 63. How many trade days have you had for silver this year? We may have had 10. Okay, this will make us fatter as we move. The important thing is that it's made in temporary level 2. Another level 2 of 90.58 has been reached. Or has it? How high is the high of 90? Whoop! Let's stick with 6 months. 91.57. The upward HBF method break at level 2 has been made. You've done it. This building is very big. Remember that we told you it's a 6-month trend. It's the biggest one I have. As I said, the up leg began way down here in the 1970s, or even earlier in 1964, before 1968. All of this is one big up leg. This has been building for a very long time, and now that you've run that, you can have a slowdown. You should be careful now. Now is not the time to use power to whales in. But there's more, and this is where small time frames come in. And find out that I, the market shooter, and the merry men are drawing again on the 12th hour. I'm sorry, I have another draw going on at the moment. When you get close to 90.58, which is the macro rest period, and not a top or a bear market call, please don't be stupid. It's a localized high with a possible pullback that doesn't have to be big and could have a blow-off move through it first. You can go through it properly. We haven't fully finished going up yet, and I'll explain why. But when this 4-hour or 2-hour ends, I want to be heavily leaning on those testicle-squeezing longs of JP Morgan, which is a liquidity provider to brokers. I'd like to be on board a little more and have the size cut down. The price of silver is currently following the rule of the parabola, which says that prices rise at an exponential rate over time. This vertical rise is the opposite of a global fiat debt bubble that is popping, causing uncontrollable volatility that is apparently putting a lot of stress on big liquidity providers like JP Morgan. As the trend moves into this melt-up phase, returns are squished into short, explosive windows. This means that real assets will be priced more fairly against currencies that are failing. The market has technically passed a key point by reaching interim level 2, which is around 90.58 on the 6-month chart. 6 periods in a row of gains is a rare event that points to a macro rest period or localized high rather than a bearish turnaround. So the best thing to do right now is to lean out, which means to reduce your leverage and lock in your gains instead of chasing the move, since the market is getting ready for a necessary consolidation before its next big leg up. Leave a comment below with what you think about his opinion. If you learned something from this video, please help us out by turning on alerts to find out about our new videos. See you in the next movie. Thanks for seeing.